Ladies and gentlemen, K-Kim here. Welcome to the market update. Hope you guys having a good day today. It's Friday. Market just closed about 7 minutes ago here. And looks like we've had a bullish week this week. In last couple weeks, market has been up ever since we retested 320 there just several weeks ago, and market has been marching higher. There were some up and down shenanigans here and here, but we talked about looking at things overall picture that, you know, and this is the reason why, despite the fact that we saw this kind of pullback, which was about 10%, right? But we were always bullish in the long term, and main reason is because market is continuing to cultivate higher lows and higher highs in the big picture, in the primary term. And so this entire week, you know, we've been talking about the 65-minute chart, navigating through some of the up and downs really last couple of weeks, ever since it bottomed 320 there. And we've had some good signals, you know, from the price action on the oscillator. We were able to maneuver through some volatilities, navigate through some of those up and down and some shenanigans. But you know, this market isn't the market without some shenanigans. It's bound to happen, and volatilities is always around the corner. You never know when it's gonna hit, but it will hit. And that's why it's very important that you don't let these short-term volatilities get to you, right? We have to understand that it takes time for trend to be developed, either upside or to the downside. And this is the reason why I've been analyzing this market with you every single day, you know. And I started doing the daily video pretty much back in, you know, late March, early April, and been navigating this market with you guys through it, and we're here. It seems like it was just yesterday, right? There's massive panic in the stock market, but we're back here. We're up here at 346 now. Looks like we're not too far away, making new all-time highs. And so let's analyze this. We'll look at a little bit more comprehensive. We'll do a little bit more comprehensive analysis today. This is the weekend video, the market update video, but I will go ahead and follow up on that daily or that 65-minute chart that we've been looking at Monday through Thursday. So it is all coming up right now. All right, so let's go to the 65-minute here, right? And let's follow up from what we've been talking about this entire week. It's really last couple weeks, I think the biggest key aspect when it comes to, you know, overall technical posture of this market, looking at the S&P here, it's the cultivation of an uptrend, right? We talked about it many times this week, how this market was in a midterm downtrend until we saw that, you know, higher or equal highs here. And that all happened right here, right? So we talked about it. Basically, you know, we wanted to see buyers coming back up here, at least tagging that, despite the fact that we saw abrupt sell-off after tagging 342 right here. And this was what? This was just, you know, a couple days ago. We remained bullish, you know, because this is where the buyers got up, take that 342, neutralize that downtrend, right? What is the definition of a downtrend? Well, it's lower highs and lower lows. That's a basic technical analysis there. So what happens when Buyers reclaimed, at least tagged at 342, got back up to this level, which is very, very important level at 342. What happened once we came back up, tagged that level? Well, no, we're no longer right at the time. This again, despite the fact that we did see abrupt sell-off here, once we got up there at 342, the downtrend thread has been neutralized, right? And once that happened, all we needed to see is another higher low. Because if you look at things in a in a midterm like this level is very important, right? However, if you look at things in the short term of things, you can see that in the short term, they were cultivating higher highs and higher lows. This is why you have to understand. This is why I go through every single day these videos and I tell you the short-term sentiment, midterm sentiment, and the long-term sentiment, right? Because short-term sentiment is bullish. Why? Because higher low. Despite the fact that we saw this abrupt sell-off, despite the fact that we saw that 2% gap down, higher lows and higher highs. That's what was happening in the short term. But in the midterm, before this tag, we were still in a downtrend. So that's when you want to see, okay, we already improved in the short term after that bullish divergence we talked about here, right? That was a start of this bullish run, right? The price action making lower low, the oscillator making higher low. That's the bullish divergence. We talked about that. And then ever since then, we saw a big move, nice gap up. That gap got protected. My midterm moving average faithfully rising higher, no longer declining lower, it's rising higher. So we started seeing these improvements in the short term. But what we needed was that midterm trend to be neutralized. And that's what happened here by tagging 342. We pulled back and then we gapped up next day. And with that gap up, there was a second gap now, and market is back up at 346 now. And we have very definitive higher high. This is not elusive. This is not ambiguous, right? We talked about it yesterday that, yesterday daily update video, if you go watch it, we had that slight higher high here. If I go to line chart, this right here was yesterday, just right here. That slight higher high. So the sentiment that I gave you yesterday was what? In the midterm, obviously short-term bullish, but in the midterm I said 1/3 bearish, 2/3 bullish. Is because I wanted to see a definitive higher high. With today's move, do we have a definitive higher high? Is this high higher than these highs right here? Is it definitive? It's not elusive, it's not ambiguous, it's pretty definitive. We can all say, right? A kindergartner can say that that's a higher high right there. That's a higher high. That's higher than this high for sure. It's not elusive at all. Correct? So now, as of today, for the first time ever since it broke below my midterm moving average here, now I can label this market in the midterm for the first time since this plunge bullish. We're midterm bullish. We're short-term bullish. Obviously, long-term bullish will go back in the daily chart, or when we talked about this in the intro of this video, right, earlier, why we're bullish in the long term, looking at the daily, right? So the sentiment is bullish short-term, bullish mid-term, bullish long-term. Short, mid, long, they're all bullish. That does not mean, you know what I'm saying? That does not mean it's going to go, oh, wow, now K is all bullish, so that means we're supposed to go straight up to 360. That's not how you look at the market. it means even if we see a steep pullback, even if we go back into 342, even if it comes down to 337, even if we do see from here to, let's say, 3% correction, there's a high chance market is pulling back to cultivate higher low. That's what we're saying. Because can you imagine if we just had this resistance, we start falling 3% from here? Well, the problem at the time would have been we have lower highs. And we're already cultivating lower lows. At that point, we would have to be bullish because there's a good chance it's coming back down to make lower low. So falling 3% from here, falling 3% from here, completely different scenario. That's why understanding market sentiment is important. That's why I'm giving you market sentiment every single video. Short term what? Midterm what? Right? That's what I'm saying. I covered this on the last weekend video. Right? I covered this on the last weekend video because I've getting a lot of comments and questions on Twitter, Stock Twits, and YouTube. When were you supposed to go long? Right? And I'll briefly touch it again. I wrote this September 6th, right? That was when, somewhere here, right? Somewhere in this vicinity went to when I will be buying. The levels I'm looking to accumulate again. I'm talking to the long side. And this was the 320 right here, the near the 320 level. But I gave you wide range because nobody knows exactly where the bottom is. No one does. You don't know. I don't know. Warren Buffett doesn't know. Ray Dalio doesn't know. Trump doesn't know. No one knows where the exact bottom is. I'm saying these are the levels I am going to be accumulating in the market. My first level is near the 320. So you know what happens in the market. Once you see the clear signal, quote unquote confirmation, it's actually kind of too late. Because now you want to wait. You want to find the perfect bottom. So you thought, well, 320 doesn't seem that 10% correction after 65% move since the March lows. That 10% correction doesn't seem too much. And that's what a lot of people are thinking. That 10% doesn't feel much. We need like at least 20. So a lot of people are waiting for 310, 300, right? So maybe they're scared. This is too early. I taught you guys this before. The market either likes to bounce early or late. It's never an ideal level. So everybody's looking at same level, maybe 310. That's what everybody's looking at. Market is going to make sure it's going to bounce early or late. Why? Because it bounces early just to make sure you're left out. Sometimes bounces late. Maybe it's not going to bounce at 320, 310. Maybe it goes down to 300, 295 or something like that. Why? Because if you did buy at 310 or 300, market's going to make sure you get flushed out or get stopped out before making a move. Market doesn't want to bounce in an ideal level. So all of us were like, yeah, that's a good level. Yeah, man, I'll buy that dip. And 90% of people are thinking that a market always fools the majority. So market isn't going to do that. And also, if you wait for quote-unquote confirmation. So now you got your confirmation here. It's a little bit too late. It's a little bit too late. If you're long-term, you're willing to go through some 3-5% corrections or something like that, maybe it's still worth it. But it's a whole lot better going long here in this vicinity here, 325, 320, 325, 320, right? Start accumulating there and maybe buying some of these dips. Then after this market already moved since the lows here, we already made about 8.5% move. It's tougher. Doesn't mean it's not gonna work. It's tougher to get up here. You know why? Because again, market fools the majority. So what do you think a lot of people are thinking right now? Well, they're gonna start FOMOing, right? I talked about that, right? You missed your entry down here somewhere, and then people like, oh my God, is this market gonna continue higher now? Go make new all-time highs. And then just people sitting on the sideline, they hate to see this market continue to move higher without them. And a lot of times people start to chase, and you know how the market is. it likes to punish the chasers, and market rewards the risk takers. And this is the first level here, as you can see on the S&P, that 320 level. Same with the NASDAQ, it was at 260 level. And same with the Dow, it was at 265, 267 level. And those are the levels actually market did see a bounce. If I go to Qs here, you can see that Qs bounce at 260, right? So those were the first level that I was accumulating longs. And I was buying more on some of these dips also. But after breaking out of this level, this is kind of the level that I'm going to start avoiding going long. This is the reason why I didn't go long today. I was already long before. And that's how you're going to play. That does not mean I knew 320 was going to be absolute bottom. No. What I was doing is I'm preparing. So if the market does bounce to the upside, I'll be good because I want to be part of this. But at the same time, if market does go up a little bit and then start pulling back to 310, I have more firing power to accumulate more, but probably, at that point, at the time. And that was planned. I never knew 320 is going to be exact bottom where it's going to be back up here because nobody does. I'm not God. I can't see the future, but this is a level that I was willing to accumulate. That's my first level to accumulate. That way, if the market decided it's going to go back up to all-time highs and even 360, I want to be part of it. So I don't have to chase later. Because a lot of people chase down later. Because they think, what if this market never pulls back? We go straight to 400. So one thing I've learned over the years is I hate going long on a breakout. You can kind of call this as a breakout because now look at that. That's a base. It built base for a month or so. You can even look at this as, I don't know, inverted head and shoulders. We even talked about this, potentially this is happening, right? All inverted head and shoulder is just market shifting from lower lows to higher lows and higher highs. That's all that is. That's what inverted head and shoulder really is. We don't really even need to call it inverted head and shoulder. It's just market shifting from a downtrend to an uptrend. So let's look at the levels here. So this is a level 342. I would also give another level just in case some kind of shenanigan next week. But if we do see a bounce, there's going to be a short-term moving average. Or if we do see a decline sometime next week, my short-term moving average is hanging around at 344. That's a gap area. That's going to provide support. If it continues to lower, 340 to 340 should act as strong support. We got how many gaps bears have to go through now? 1, 2, 3, 4. 4 gaps have been opened. Right? And those gaps will provide a strong support. Should the price see, decline next week? That's why buyers deploy these gaps. This one gap provides support for entire week. See that? This support here, support here, support here, support here. And then this gap right here, that gap got filled. That crazy shenanigan here, just 2 hours, 2 hours plunge, just a couple days ago, right? Back in 6th of October. Where do you think it found support? After the gap has been, that gap was right there. That gap got filled, coinciding with the midterm moving average. It is no coincidence we found support right there and gapped right back up. Let's check out that oscillator. So oscillator, we talked about this. Once the oscillators start, cultivating these higher lows, something is brewing. Because oscillators are meant to oscillate back and forth like this. But once they start getting elevated, start oscillating back and forth on top of this band, buyers are up to something. Same thing happened back in May before that June rally. Remember that 320 rally from like 270 to 320 rally? This is the first thing we saw. And when I was analyzing this, that as this oscillator started, make those high lows. Not only that, we also saw this back in where? Back in August, right? August and July. All throughout August, where just this move didn't seem like it wanted to pull back. Remember this entire move? Guess what? This oscillator did not oscillate back and forth. It did not come back down to the bottom of its band. Instead, we stayed here. After cultivating that higher low, it stayed here for more than a month. More than a month and stayed at the top of its band. That is not usual, like, you know, how this oscillator is gonna behave. It's abnormal. This happens when we get into a prolonged uptrend, right? Same thing kind of happened here back in June after it bottomed at 300. Look at those higher lows and look at market continue to make a move. And here it's happening again, right? We were oscillating back and forth for some time, and then out of nowhere, all of a sudden, after the bullish divergence here, we started oscillating back and forth on top of this band. Currently, we do see the oscillator cross down. That means buyers are getting tired, but this is exactly, you know, where we have to see how the market is going to behave on Monday, because we could see price correcting through time rather than price, right? So you can see right here, you see that oscillator came down, but price moved sideways. And that's when you know bulls are very resilient. Right here, price comes down, oscillator comes down, right? We see the cross to the downside, price comes down, oscillator comes down. We see the cross right here, oscillator comes down, price does not come down. You see that? That was the first signal buyers are up to something, and we're finding support right there while cultivating higher lows. So now we see a cross, bulls are tired, so maybe we see either move sideways in this vicinity, wait until the oscillator comes down, reset, and then bulls have energy built to make another leg higher, potentially retest that support. Obviously, I'll come back for you guys on Monday and give you guys an update on this. You can follow me at 2K Kim on Twitter and StockTwist. I've been tweeting things out pretty much every single day, several times a day, giving you guys an update on this chart, the oscillator and price action. And I obviously every night, you know, I do the daily update videos and we analyze the oscillator and the price action right away. So let's go to the daily chart. But before we go to the daily chart, again, the sentiment is bullish in the short term. We're above my short-term moving average. My midterm moving average is rising, right? And we have cultivated that higher high. So we're bullish in the midterm. We're bullish in the short term. We're bullish in the long term. Let's go to the daily chart here real quick. So on the daily chart, this was a support, right? That's the lows here from back in June. We found support right there. And then you can see that now we're back above, you know, on the daily chart, my moving averages were back above it. But I think the very, very important level is this level here. That level, we reclaimed it back, right? And we have cultivation of higher high there. And so there's a good chance that market is, it may not go straight up. It might have to pull back or something, but there's a good chance market is getting ready to get back up here and fill that gap right here at 358 or so and get back to the new all-time high. And also keep in mind that this is a level where we found resistance at the peak, this right here. And we talked about that when the market was going up back in late August, you know, that this is a time to be fearful when others are greedy. You guys remember that you want to be fearful when people are greedy. And that's when we saw that 10% correction. And we may get back up there to retest that potentially, you know, this month. So, yeah, so like everything as far as the chart pattern is concerned and the price action is concerned, everything is looking bullish. Short-term bullish, midterm bullish, long-term bullish. This does not mean that the ride to the upside is going to be smooth. There won't be any volatility. That's not what it means. What it means is even if we do see a pullback, likely market is pulling back to cultivate that higher low. You must have to learn how to navigate through the volatilities because that's just part of how this market behave. Like one day you wake up, there will be 2% down day. One day, everything seems to be great, and the last 2 hours, it pukes, right? That's just all part of this market. And your objective is not to freak out every time when we see some kind of crazy shenanigans, but to objectively look at this market. So, okay, we see that decline, but overall though, are we still in bullish trend, right? And that's what we're trying to do here on these videos every single day. Let's go to Qs. And I gave you this level, right? When the market was falling right here. That was that rising pivot, right? So Qs actually broke above that rising pivot and coming to retest it. Spiders actually got to that pivot, that resistance, and then falling back and trying to get back up. Qs actually broke above it and then now retested it right there. Resistance, 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 now a support, right? Old resistance becoming new support. That's also basic technical analysis there. But I think the most important part of all this, when you look at a daily, again, I think market decided it's going to bounce early. I mean, when you look at Q, especially with the 80% move since the March lows, in just 4 or 5 months, NASDAQ performing 80%, 80, in just 4 or 5 months. That's a huge, very fast performance. From the market. And so even though we saw, I think this was a 13% correction, it feels like 5%. It feels like this is a less than 5% correction because we had such a big move. And I think psychologically, most people was expecting much bigger decline, right? Because we saw such a big move, it can't possibly keep going higher type of thinking. Right? That this market should see bigger decline coming back down to maybe 234 or something like that. I think everybody was looking for 250, somewhere in that vicinity, I believe. That's an ideal level. A lot of times that's what everybody's looking at. Market is going to make sure it doesn't give it to you. Because market isn't going to make it easy for everybody. Market is going to make sure it's always, there's some kind of suspense every time, right? It's going to make you always be scared. Well, yeah, I mean, we had such a big move. How high can it really go, And then when things keep going higher, people going to start talking about, oh my God, this reminds you of a dot-com crash. And then now there's going to be another suspense. Like when the market is pulling back, you're scared because you don't know when to buy. You think there's going to be steeper decline. And then when the market starts going up, well, you're scared now because, wow, this thing is not going to end well now. This thing keeps going high. Look at these valuations on these tech stocks, man. This reminds me of dot-com crash. This thing is going to crash hard. And then it's going to make you scared to go long or even hold on to things, right? Tell you what, I've been trading this market since 2009. There wasn't a moment, one single moment where market feels perfect, just perfect. Everything is perfect. Never. 2010, 2011, 2012, 2013, 14, 15, 16, 17, 18, 19, 20. There's always worries. Always, man. If I feel like this market is perfect, that's when I'll be very, very worried. Very, very worried. There will never be a perfect scenario. There will never be a moment where, oh yeah, everything looks great. Fundamentally, it's great. Technically, it's great. Market pulled back just right. This is all go perfect level to accumulate heavily. and CNBC saying the same thing, all the gurus that I follow on Twitter saying the same thing. This is absolutely perfect. That day will never come, my friend. That day will never come in your life. So you must understand how to navigate this market, where to, accumulate, where to sell, how long to hold. It's not easy business, and you can't never make it simple. I'm here to tell you the truth that trading in the market successfully, consistently over time is not simple. Just like your life isn't simple, market isn't simple, right? There will be people tell you market is simple. It's just to scratch your itching ears, to tell you something you want to hear. If market is that simple, everybody will be rich. Market is here, designed to make sure 90% of market participants, right, to be fooled. So you got to start thinking differently than everybody else. If everybody is thinking certain way, you ought to think different way. Let's go to the volatility index. Finally, volatility index is, falling, not falling really, but for the first time we gotten below my midterm moving. It's been holding up here for quite some time. As you can see, we finally kind of slightly gotten below it. We got the gap area here. If the market continues to move higher, there might be some fake out or something like that. It happens every time in the stock market where, that the level, you see that this level, when this level gets broken, everybody gets stopped out on their longs or something like that on VIX, maybe gets a little lower and just pops right back up, right? Market is great at that, especially when certain level has been holding for so long. And once we breach that level, everybody's in panic, start getting stopped out or something like that on their longs, and loves to just go right back up and then do something like that. So keep that in mind. Just because a lot of people look at it this way, like, okay, there's a signal there. Looks like the VIX is breaking down. That's a signal to go long. And then they looked at the S&P 500. Look at that. That that midterm, that's pivot level that I just talked about on the S&P, that 342 level, right? Well, look at that level. We just broke above it. Yeah, that 342 level. We just made that breaking out right now. And so they look at the VIX, they look at S&P, and they look at all these levels like, oh yeah, it's just now. Yeah, they're like, now it's time to go long. Right there, we got the confirmation, right? This is where things can get ugly. This is why. Because everybody's thinking the same way. Everybody's looking at it in the same way. I'm not saying that's going to happen all the time. There's at times where things just break out smoothly. It does happen. But more often than not, some of these levels, I wouldn't be surprised to see something like that. So VIX is actually still kind of elevated. If you look at things, we haven't made a lower low yet. We're kind of still in that. That's a low. That's still kind of the higher low vicinity, right? We haven't come down yet, despite the fact that, the market has been rising higher. It's been actually kind of floating up. And I'm not saying, that's going to tank the market or anything like that. We just cover the market and the market sentiment, short-term, mid-term, long-term. I'm saying there might be some shenanigan just so the market can punish those chasers. Looking at those perfect confirmation, now that you see it's breaking above 342 on Spider, maybe VIX looks like it's breaking down, and then people jump in long, and then, market loves to just give them a little scare. Let's go to gold. So gold, some positive action here last couple of days. You can see we didn't pull back much. How much correction do we have? Yeah, 10% is not a whole lot. definitely bouncing early here on gold as well. But we're still kind of in a downtrend, right? That's a high, lower high, lower high, lower high, lower high. So I think in the short term, we're still in a downtrend, right? Short-term downtrend, short-term bearish still, despite the fact that we're making a move. Kind of mid to long term though, we're still in an uptrend, correct? So kind of take it in that perspective. They got highs, lows there. Let's go to Bitcoin, end the video with this. So grayscale Bitcoin found support. Let's do a little bit of maintenance here. What I'm going to do, I'm actually going to remove this real quick. I'm going to put in, there's a gap right there. Okay, so, and there's some of those, this gap still holding. Remember this thing came, you see the long lower wick? This is where we found support in the gap area. That's why gaps are great. Remember this big gap? That gap just got filled, this gap. And that's where the price slowed down and even bounced. You see that. And also at the same time, you see how if I go to line chart here real quick, this low is higher than this low. We've been talking about this despite the fact that we see some steep decline here. But let's keep in mind that we have higher high and higher low. What I said last couple weekends that I don't know where it's going to cultivate higher low yet. But we are still in the vicinity of higher low. That's, if we do see a bounce there, that's definitely higher low, right? Gap got filled. And that acted as support. See that? So what I'm gonna do, I'm actually gonna modify my, I wonder, let's see. I wonder if this thing connects. If I go to line chart, I'm gonna connect through here. So I'm going to connect through here like this. So you can see here, here, here. So that's current. So basically this uptrend is telling us that's the higher lows. So we got the higher lows and higher highs. And you see we gotten above some of these moving averages. We're going to need more. So I'm going to move this, the support levels, because of that gap that opened just this week, that 1135 gap. I'm gonna move this here because that's gonna be important level to hold. So now we have pretty definitive level here. We got the high, these higher highs, we got the low, and potentially higher low here. We don't know until this thing goes up and make a higher high. This gap needs to be filled. That gap's gonna act as resistance. So maybe you go up here and fill that, pull back a little bit, and then make new highs. That might be where the market is, or the grayscale Bitcoin is headed. Make sure hold 1135, 1080, right? And this gap is gonna provide some good support. Already this gap provided support. So if the gap gets filled, it's probably gonna act as support also. That's why gaps are great, because that's gonna provide support. Well, there you have it. You guys enjoy enjoy this weekend. And I'll come back for you guys on Monday. We'll look at these things once again on my daily update videos. I'll tweet things out if I see anything happening with the oscillator and things like that. You can follow me at 2K Kim on Twitter and StockTwits. Enjoy your weekend and good luck trading next week.